All I hear are caveats, Michelle. I hear caveats about the strong one we had a month ago, and I heard Zandy talking about all the technical factors that make the most recent ADP report not representative of what's really going on. What is really going on? Are we in a 200,000 per month job market like we've been in, or is there really something that's indicating it's slowing?
I don't see signs of it slowing. And, we look at indicators like initial unemployment claims is obviously the easiest thing to point to. But there are other, markers of the labor market that suggest to me that not much has changed and that we are still looking at a pace of employment growth. We're probably slightly below 200, but to be at this stage of the cycle and to be even thinking about job gains that are north of 150 or 170,000 is really impressive.
When the 3.2 GDP number was printed as well, and we're going to have Jason Furman on later, there were a lot of people, and I don't know whether they're conflicted or whether there really is something to their arguments, but that was seen as masking a lot of underlying weakness. What was it, inventories?
Well, it was. Inventories and trade did make really large contributions.
Are those going to be reversed, or they don't count?
Well, again, what we care most about is the underlying level of demand. And there's no question that business and consumer spending slowed in the first quarter. A lot of it is the math. We had very weak numbers around the turn of the year, and that sort of sets up for the quarterly averages and the growth rates to look lower. The important thing is we had really strong numbers for March. So we are set up for even those categories that looked softer underlying in Q1 to show much better performance. And again, you just got to look through a lot of this noise. And the underlying growth of the economy continues to be very solid. Labor market trends are very positive. There just is not a lot. I know we're all looking for any sign of things cracking, but when you step back, there just is. You've got an economy that continues to perform well.
All right. Boockvar, work at a place called Bleakley, which is perfect for you because your view of the world is pretty bleak most of the times. Did any of you, this is a signed reading today. So productivity recently been rising at 3.6%.
Yep.
For 10 years, prior to that, it rose at 2.4%. So that's exactly 50% higher in productivity. The things that you need for 3% GDP growth, productivity is probably the one thing that's
been the missing piece.
That's been the missing piece. It's here now. It explains how late in a cycle that we are right now that we're still able to see some of these gains that we're seeing. It'd be great for wages. It'd be great for continuing to grow strong. Is it a lasting trend that you missed? Is it something that you believe is sustainable?
I hope so, with the eased regulatory environment and tax system, particularly on the corporate side.
But
and hopefully,
I hear, like you said yesterday, I hear a but.
No, there's not necessarily a but. I don't want to tie this back to monetary policy, but when you have rates just low for so long, you have a lot of zombie companies that shouldn't exist, and it creates its own internal inefficiency. And I think that helps explain why productivity has been weak for so long. Now, luckily, in the fiscal side, we've been now able to hopefully offset that, and that is sustainable because, like I said, it is a missing piece and would be a huge boost to sustainable growth, not just a cyclical bounce.
Did you look at the GDP number and the last couple of jobs number with a raised eyebrow, as if this is making things look better than they really are?
I like to smooth things out. I don't like to take 1 month or 1 quarter and say this is it. So I think if you take the first quarter and the second quarter, it'll still be around 2.5. Like today, I think there could be upside to the jobs number. But I think if you look at the last 3 months, we've averaged 180,000 jobs. The last 6 months, about 200. So an upside surprise of 220, 230 would get us at an average at about 190. And I think that's important
after that one,
smooth it out.
The outlier that we saw that had everyone.
Yeah, I mean, the jobs market is still good. The pace of firings is still very low. We're averaging 180 to 200 if you smooth it out, which is pretty healthy.
Good things start happening, Michelle, in terms of the participation rate, in terms of wages. All these things start happening in a tight labor market. You have capital investment. It all starts happening.
And it's all clicking in. The one thing I would throw out there is there is talk of a potential upside surprise as the government starts to hire workers for the census. So that'll be the next thing that people will, if you get a stronger number, I know you don't like the caveats. The caveat people will say was, oh, it's all the government and the hiring for the census. It's important to look at the underlying trend in private payrolls, and I think that's going to continue to be very solid.